Hey guys, hope you're good. Let's dive into this morning's trade. Before we do that, I want to show you what the hot zone strategy is all about. Here's our live trading room chat this morning. Just some of the trades that we were taking. I'm going to dive into the DAX and why we took the DAX short and the NASDAQ shorts today. And it's all to do with the hot zone strategy. You can see here, Ian took 100 points profit on the DAX short. TC got 50 points to the downside. Zoe got 80 points. It went on and on. Shayla here was looking for FTSE shorts. I was also looking for dollar yen shorts. That was a good trade. Also some nice profits on the pound US dollar, which was a long side trade. However, we're going to dive into showing you what the hot zones are all about, really, because when you're starting your trading, you're going for the morning move. We're going for that volatility move in the London session. We're going for our morning move. We're going for our day's money. I want to show you how you stack the odds on your side with hot zones. Okay, so let's have a little look here at the 4-hour time frame with the German DAX. Now, I often get asked, what is your anchor chart? An anchor chart is the bias, the time frame where momentum is going. And I'm looking at 4-hour charts. You can use a 1-hour time frame, but we've got to pick one. And I like to pick the 4-hour. The 4-hour can give me 4 hours worth of trading. I don't need 4 hours. I'm looking for the morning move from 8 a.m. London time all the way up to 9, 10 o'clock. And I'm sort of done for that morning move, okay? So we want to be trading, of course, on the right side of what we call momentum. All right, we want to be on the right side of where price momentum is. And before we dive into momentum and hot zones, we first got to look at scaling our charts correctly. Because when I see someone with a chart like this, I just want to, make sure that they scale it correctly, because you cannot see why price has reversed off of this area and gone down. Dark green means it's gone down, guys, okay, on the Pro Trend system. So for me, first things first, I get the student, I get them to actually scale their charts correctly. Now, I want to go back, and as I use my mouse here, I'm literally just turning the wheel on the mouse, and it now gives me more data to look at. So now I can see prior highs. I can see areas of interest here. That's a resistance area, okay? Resistance above the price, support underneath. Page 1 of technical analysis. But when I'm looking at a hot zone, it's just not one area here that's going to provide a hot zone for me. I want multiple touches of what we call a resistance hotline. Hot zone. Underneath the price is support, okay? So I want multiple touches of hot zones underneath the price. But because the price is nowhere near down here at the moment, I'm only interested in up here, okay? So price rallied at the last couple of days all the way up here today. Now, what I then do is, let's delete this one up here because it's irrelevant for the moment. What I then do is scale my charts to make sure I can see far back. Now, I've got automatic hot zones in here, which are these horizontal lines, but you can make your own up here if you wanted to. And you can see, look at price on the left. It went up, hit that price here, went up, hit that price here. Now, what a lot of people do is they put a line in for resistance. That's fine, that's fine. But what I notice from doing this for over 20 years, nearly 25 years now, is that price often comes short of resistance lines or pokes through resistance lines, okay, hot zones. So what I like to do, I like to find a band. I like to find an area where price has reversed before, okay, and two touches. Look, you can see here a reversal, reversal, reversal. So in this price band here, I can see that this area here is of interest to me, and it projects its way forward over here. You don't have to get too particular, but just make sure that you know that price has reversed off of this area. So it's reversed here, here, multiple times here, it reversed here, it shot through here, it reversed here, it reversed here. So for me, that is a hot zone. That is a hot zone area that I'm interested in taking a trade from, or I'm projecting it into the future. Now, above the price, going sideways, is a horizontal hot zone. Below the price here is a horizontal hot zone, okay? Now, trend lines, as I said, page 1 of technical analysis is support and resistance. I like to use trend lines that provide me with an area of where price could reverse. So let's take a little look at drawing some trend lines in and around this hot zone here, this particular box. I want the line to go into this box. Remember, that line is a horizontal hot zone. So I'm going to find, and you need to do a little bit of investigating here, I want to find a line. Remember, when you're doing a trend line, it needs 2 touches. So 1, 2. I'm going to project the line forward, okay? So there it is. 1, 2. I take it inside of the trend, inside of some candlesticks. You're allowed to do that. You're allowed to do that. It then gets projected into the future. Into now a horizontal hot zone, diagonal hot zone, a trend line, okay? So that's good. So this area now is of interest to me. It took me, if I wasn't doing the video here in the lesson, it would have taken me 5 to 6 seconds to do that. Every single morning I'm looking to do that, okay? And so then the next thing is really to give me a score of 3 points. What's a 3-point score? Well, basically it means 1 hot line as in horizontal, 1 hot line as in diagonal, trend line. Let's try and find another one. So I'm going to take it here and project it into the future here. So 1 touch, 2 touch, project it into the future. 1 touch, 2 touch. There you go. Okay, so now this box here, this box which is a hot zone, now gets labeled as a major hot zone area. All right, where price could reverse. And you look at this and you think, okay, well, so what? It's not moved that much. But let's think about the high price, 24,000, let's call it 24,500, all the way down to the low of this candlestick, which is a live candlestick here, guys. 24,000, let's call it 300. I mean, that's 200-point move to the downside here. That is a significant move when you're day trading the morning move in the German DAX. You can see some of the students got 100 points, some got 80 points. You don't need to catch all of the move. But by drawing these hot zones, we're ready for a reversal. Now, just by using this 4-hour time frame as my anchor chart, also known as a buyer's time frame, I don't really want to be entering a trade here, because where is my stop going to be? Where am I going to put my stop? Could I put it above the highs? Well, that's miles away. The risk reward for me on that is awful. So I don't want to enter trades, particularly from the 4-hour time frame. I have done that, but the stop placement for you is going to be too wide. So I could always go down to a smaller time frame, and we'll go down to what we call the trigger time frame next. But look, there's another couple of points we could score here, guys. We've got 3 points because we've got the horizontal line, we've got this trend line, and we've got another trend line. We can make more trend lines, and there's no doubt we could bring this hot zone into a multiple of 5, 6, 7, 8 point score here, with seeing this as an area where price could reverse. We could also use, though, what we call Fibonacci. Now, Fibonacci, if JP Morgan technical analysts use Fibonacci, and we certainly need to be using Fibonacci, and Fibonacci retracements and extensions are just hot zones as well. Of course, they go deeper. You can spend all day drawing Fibonacci lines, but let me show you how to draw one here. I'm going to take the Fibonacci retracement extension, and I'm just going to take it from this last swing and drag it all the way down to the very low significant point here. Now you can see that the actual 161.8 fib extension is above this hot zone. So it doesn't fit. I cannot give that a point at all. So then I need to adjust. Well, where are they taking the fib from? Let's try another area here. So let's get that and then start it from this area here. So I'm going to start it from this hot zone all the way down here. And you're thinking, why is he doing that? I'm not. I'm making it fit. I'm making this Fibonacci area here, the 1272 fib extension, fit into the hot zone area where I've got my other scores here, where I've got my other trend lines and resistance area, the hot zone. So it's really important that you make it fit, okay? Because that gives me another score. So now I've got the 1272 Fibonacci extension, I've got hot zone horizontal, I've got trend line diagonals here, and I'm sure I could find plenty more. The storyteller indicator has gone multiple histograms. Once it goes above 8, it starts to get overbought. So as I said earlier, we want to now go back to the trigger because the stop placement is far too wide for me. So now I've drilled down to a 5-minute time frame. You can see our pro trend system and red and our tracks are all red pointing down this morning. So first trade you can see 740 reds, lovely move to the downside, nearly 80-point profit trade to the downside, and then another red to the downside. So you can see the students in the trading floor, in the trading room, are actually short in these markets. These are shorts, Ian, 100 points to the downside. It's all in the prep, guys. And the prep, the more you do it, the easier it becomes, okay? It's going to take you 5. When you start learning how to draw hot zones, it's going to be 10 minutes, all right? And you'll practice and practice. Once you're good at it, it's going to take very little amount of time, like minutes, 2 minutes to actually draw those areas of hot zones. So the trigger time frame is key. The trigger time frame is where you get your good risk reward. I'm ignoring the greens. Why am I ignoring the green buy signals? Well, because we're looking for shorts. We're into hot zones on the 4-hour. You know, if I'm buying here, I'm buying into the hot zone resistance. I only want to be looking for short side trades. I only want to be looking for short side trades because of the hot zone resistance. And there was multiple setups today and we had to pick one. But if you look at the FTSE 100 here on our anchor chart, on our 4 hours, lovely buy signal this last week. It's gone green all the way up. And then we stalled at this hot zone here, this trend line hot zone. But you can't see, as I said, you can't see back far enough because you haven't scaled the actual chart correctly here. You know, if you scale it like this, you can't see the past. You need to see the past. And the reason you need to see the past and scale it correctly is because everybody else who's any good at technical analysis will be drawing trend lines, hot zones in those areas. And if you're not doing those basics, then you're missing out on profit. So we want to scale, guys, correctly. And if I scale, I'm looking at this obvious area here projected into the future here for Wednesday's trading. But look, that's 1 point because that's one hot zone. If I go back even further here, I can start with an obvious, is that a peak? Yes, let's project it into the future. Okay, you can see here, there's areas of hot zones for me. I can project it into the future. I can really go to town with drawing hot zones here and finding an area of resistance that I want to take a trade from. Remember, I'm not really drawing hot zones on 5-minute charts because really it's not enough profit for me. I want to draw hot zones and areas of interest and reversals on bigger time frames and then go down to the smaller time frames for the trigger. You can set alarms up on your phone for this as well. For me then, I get big moves. I get big moves because I'm using the hot zones on bigger time frames because a 5-minute chart doesn't move as far in one candlestick than a 4-hour time frame. Okay, so the DAX had a 200-point move in 1 or 2 candlesticks, or on a 5-minute chart it moves 20 points. So the hot zones on the bigger time frames for me are much more significant than hot zones on a 5-minute chart. Now, of course, shorting something that is going up is fine, but you really want to find hot zones when you get a trending market as well. So, for example, this gold trade here, we've had a buy signal. We've been looking for longs in our live trading room and Scan Club every Monday for a few weeks now. We had the short side trade covered. Now we got the long side trade covered. Okay, so we've been pushing up. We pull back in this zone here, and as we pull back, a trending hot zone would be underneath the price. So I've drawn one here, one projected here, projected into the future here. So as it's pushing up, it breaks that trend line, it comes back into the hot zone, touches it once and twice, and then fires another green and goes up. So what would we do if we had a hot zone underneath a trending market that was bullish? We would look for buy signals on the 5-minute greens. So here we are. We've been looking for buy signals. We would ignore the red signals and just look for buy signals, guys. So there is a difference between shorting a hot zone that is above where the price is pushing, okay, and then buying in a trend. So this is coming down now. We would look for hot zones underneath the price for it to then turn and go back up. That is a trending hot zone. The move here today to short was a peaking hot zone. It peaked and we were looking for reversals, okay? So a few things to take away from this lesson, guys. Scale your charts correctly. Make sure you can see the past, because everybody else with any ability to draw trend lines and knows anything about technical analysis will make sure they're looking as far back as possible. The trend lines that go back the furthest in time are the most significant. A trend line that only lasts from here to here isn't as significant, and you're not going to get as big a reversal or a bigger points move than something that goes back maybe even years sometimes. I'm not saying for you to draw trend lines going back years. Well, why not? Why not do that? If you enjoy sitting at your charts, going through, drawing, looking at the past and looking for, you know, that's what we are, technical analysts. We look at the past projecting into the future, don't we? And the past matters because the past is trend lines and support and resistance. Not everyone's got all the smart trending indicators and systems. A lot of people will use just basic technical analysis out there, okay? And so what we want to do and what keeps us, you know, when I talk a lot about ADHD and dopamine effects with trading, by using the color method, it gives traders certainty of when to enter trades. We ignore greens and sell the reds. If we were trending up, we'd be buying the greens, ignoring the reds. We will exit on the reds, okay? So a couple of points out of this really is, you know, hot zones are important, no doubt about it, because it's areas of reversal. Make sure you're drawing your trend lines, your diagonal trend lines. Make sure you're drawing your horizontal hot zones, support and resistance, and you will be able to pinch trades every single day, profits, by using that analysis that other people don't spend time doing, okay? So hope it helps, guys. Don't forget to subscribe to the channel. If you want to work with me and trade with us in our live trading room, come and love the colors and draw these very simple trades that you can participate in with every single morning. Make sure you give us a call back. Otherwise, subscribe to the channel, guys. Give us a like and comment underneath. What do you think about hot zones? They're absolutely fantastic, and that's what nailed our trading this morning. Hot zones and colors.